So the first thing to understand is the difference between what a nonprofit organization is and what a tax-exempt organization is. A nonprofit is just the type of entity, usually you're incorporated as a corporation, a nonprofit corporation under a state law. The tax-exempt status comes from applying to the IRS, and they have codes. Normally we think of it as a 501, and a 501c3 is the code that most people are familiar with. And you get approved by the IRS as a tax-exempt organization based on your mission. And that gives you, as an organization, the status of not having to pay taxes on your income for the most part. So that's one of the main differences in tax filings for a nonprofit tax-exempt entity versus a regular for-profit corporation. So the tax form that most people file for a nonprofit is Form 990. That's really more of an informational return. It gives information about your mission, your purpose, your programs, and your finances. It becomes a public document so that it is out there for the public to see. It is the picture you give to readers of what you are. It's also very important because if it is not filed on a timely basis, you can have your exempt status revoked by the IRS. If your exempt status is revoked by the IRS, what happens is people who are giving you a donation are no longer able to take that donation as a personal tax deduction. So it's very important to be up to date on your filings. In addition, often states have what they call charitable registration filings, and those give you the ability to solicit donations in those states. So it's like a triple step. First, you get incorporated as a corporation, then you get your federal IRS tax exempt status, and then in the states where you operate and want to solicit donations, then you receive your state charitable license. And all of these filings are required annually, and they have due dates. So it's very important to understand what your due dates are, and to have a professional like St. Clair that understands how and when to file all the appropriate filings for you. Tax-exempt organizations are not exempt from all taxes, and that's also important to understand, and that's where accounting firms like ours come into play, and where someone has 20 years experience working in the nonprofit world can help you. There are sometimes taxes that you have to pay for sales and use tax if you are doing certain programs or activities that are not necessarily under your mission purpose. There's also unrelated business income tax, which can occur if you are also doing certain programs that are not related to your mission purpose. So while some things fall under your mission purpose, such as if you have a gift shop in your museum that is selling items related to the museum, is one thing. But if you are renting out parts of your building to an unrelated organization because you have empty space, you will have to pay tax on that income.